Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, as always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense to you. And we'll go over some ideas in that regard with some trade examples if we can find some nice looking opportunities. And you'll see the risk management side of things is made quite a bit easier with our web trader and app within the order window. It acts as a trade calculator and can calculate your exposure and potential profit right within the order window. So that side of things is quite a bit simpler trading with AvaTrade. Now, also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the web trader, which allows you to trade on both MT4 and MT5 accounts from one location, but with the advanced tools and functionalities that you don't find in the MetaTrader platforms. And the same is true with our app. You can trade with all of the tools you'll see in the web trader platform on both MT4 and MT5 accounts. So if we log in here in the upper right-hand corner, we'll be in the web trader platform. Now, before we jump into the technical analysis side of things, which obviously is our main focus with today's title, we should talk a bit about the fundamental news because honestly, there's a lot of it today and the rest of the week. So on the positive side, with positive momentum thus far this week, really, the US with their trade deals with various countries has really created some global optimism within the equities, and the major indices have been rising, and especially in the US with new all-time high after all-time high being hit on the various US indices. Now, that momentum is carried forward, but at the same time, there's a deadline rapidly approaching this week, which may or may not be moved. It's been moved a couple times, I think, already by the Trump administration, but a deadline that if they don't get final offers for trade deals with the countries who haven't yet done so yet, there's going to be, I think, across the board 25% tariff slapped on pretty much all countries, and some may be higher. So there's some fear about that starting to build. And I think it's kind of coming to a peak here as we get closer to the end of the week. So we've got that going on, kind of a mixed bag with trade deals being struck with countries like Japan. The EU was a big one, and obviously that's multiple countries agreeing all at the same time. And then the framework has been there with the UK, but a final agreement really hasn't been signed. And the same with China. So we'll see what happens there. But that's creating some volatility. And at the same time, there was some big economic data that came in today. Some European Union and UK data that maybe was a little stronger than expected. Some GDP data that came in. And also out of the US, GDP data came in stronger than expected, which, that's good news. But at the same time, when you're looking at in the US this evening is the FOMC rate decision with Jerome Powell speaking. So will they lower the rates or not? The Trump administration's been pushing and pushing for rates to be lowered, but thus far over the last number of rate decisions, they've held steady and not lowered rates. In the US, while other countries obviously have been, the European Union, the UK, etc., rates have been lowered quite a bit. The US has been kind of held at a stalemate there with the rate. And so the expectation, once again, if you look at the economic calendars, is that the rate will not be lowered this time either. Now, a surprise rate cut, which some would say is overdue, could really buoy the markets up, especially US markets. The lower the interest rates, the cheaper it is to do business, to borrow money, etc. But we'll see. And a lot of times, let's say they don't cut the rate, it's more about, well, what do they say in the statement after the rate decision? Will Jerome Powell speak about future rate cuts, etc.? His line and his mantra so far over the past year or so has been, it's all data dependent, although many are pointing out that the data shows CPI and PPI data showing that inflation has come down a lot and still yet no rate cuts. So we'll see how that goes, but the point is that also is adding to the volatility as we head deeper into this evening. So combination of the rate decision, some strong economic data that came out with GDP, and also the fears about what's going to happen with this tariff deadline. So, and on top of that, we've got housing data that came out of the US weaker than expected. And so that just builds into, hey, maybe rates need to be cut so that the housing sector stops disappointing, because folks just can't afford home loans at the same level with high interest rates as they could if the rates were cut. So a lot going on there to unpack, but the point is there's a lot of volatility today. And so when we go into our technical analysis, that's something to keep in mind, not so much to try and guess the direction, because there's a lot of news that's conflicting with each other, some of it positive, some of it negative, but to understand that there probably will be a lot of movement on a number of instruments, okay? I see a question has popped up. If you're having trouble logging into the AvaTrade website, I would say check with our support team. It's not something I really could handle right now, but there is a reset password option. I can show you real quick. If you're going to log in, if for some reason your login is not working, you can click here, forgot your password, and from that location, you'll be able to reset the password. You'll be emailed a link, and you could reset things on your own. But you also could contact our support team for some assistance. Now, where can we look for technical analysis? Well, we can look at the signals coming in. Maybe a good spot to start would be something like gold. With all of the craziness going on with the big news, what's a safe haven like gold doing right now? And if we click on the signal for gold, it says to buy. Okay. Well, I see the buy signal failed. You see here the pivot line. This was a signal from earlier today, and the way the signals work is when it's above the pivot and it's a buy signal, it's a valid buy signal to go after this take profit zone until and if it breaks the pivot line and breaks below it, then it becomes a sell. So in this case, if you had followed this signal, the original signal would have been a loser. It broke the support, would have hit your stop loss if you put it just below the pivot line, and you would have had a pending order perhaps to sell from below the pivot line. And that's what they've referred to here as the sell scenario. If it drops below that pivot line, they say sell, looking for further downside. So this is a technical breakthrough of an important support level. And once it broke, your pending order would have sold, and you see it went straight away down into the take profit zone. So you'd have had a small loss on the buy signal, hitting your stop loss, triggering the sell on the sell scenario, and a quick profit down into and through the take profit zone on the sell side of the signal. So each of our signals has that technical setup. If it was a sell signal originally, then the buy scenario would be if it went back above the pivot line. But we see this carried out all the way through to the take profit on the sell scenario. Now, the question is, what do you do next? Because this signal is done. It already failed on the buy side. It already won on the sell side. Overall, that should have been profitable had you set up the way these signals are designed. You'd have had a loser on the buy, short loss to the take profit, and then a win on the entire distance through the take profit zone. Hopefully a larger win than loss, depending on your entry on the buy side, if you had gotten in on that. Now, and by the way, if there are any questions on how to interpret these signals, just type the question in the chat box. I'm happy to address it. But now we're looking at, okay, what do you do next with gold? And anyone who's traded for a while can understand that gold tends to be a safe haven. It's places that people sometimes run to or many times run to when there's uncertainty in the markets. I mentioned some pretty big things that could produce some uncertainty between now and the end of the week. One would be the tariff situation. That's really the biggest one. We don't know which deals might be struck at the last minute and which ones might not. Running into the FOMC statement this evening and rate decision depends on what the rate decision is. If it comes in without cutting the interest rate again, that actually could strengthen the USD and pull gold down. But if there's a surprise rate cut, or if there's talk within the statement of rate cuts, that really could create fear of a weakening US dollar if rate cuts are expected. And when the US dollar is weakening because of rate cuts potentially, a place many times people run is out of the US dollar then, and either into the stocks or into safe havens like gold. Okay, so you can walk yourself through the scenarios that could cause gold to potentially rise back up. We're looking at one-day candles here, and we see gold has dropped 1, 2, 3, 4, 5, 6 out of the last 8 days, and has dropped from over 3,400 an ounce to currently under 3,300 an ounce. So like 120, 130 dollars an ounce drop over the past 7 or 8 trading days. So that's quite a drop. And we understand why the US dollar was strengthening against a lot of things, because the US economy has been doing quite well. The US has been striking trade deal after trade deal, which has created optimism in the US economy. And so the US dollar has been strengthening quite a bit, and gold was less attractive in that situation. Now the opposite might be true as we near some potential large tariffs being slapped on various countries, which could include China, the UK, etc. So this is something to look at is, okay, the buy signal failed, but now we've gotten down to that lower take profit zone. And the reason they say take profit there is because there's support down there. And so if we take a look at the one-day candles, we can see the last time we got down near this price on the one-day candles, for 2 days it tried to break this price right here and bounced up, hit again, and then climbed. Neared this price level here and back up, and here we are again just above this price level. So if you're expecting volatility, you're expecting a lot of movement, after so much dropping over $100, $120 an ounce on gold, perhaps this is due for a move back up. Okay, now obviously it could continue to drop, but after that much dropping already, let's do a buy scenario here, because the technicals seem to be on the side that this potentially could have a large pullback after all that dropping, especially with the big news that's coming that could create fear about both the strength of the US dollar and fear in general about large tariffs being put on a number of countries. So if that fear pushes you on the side, fundamentally speaking, of thinking gold might have a reason to go up and the US dollar might have reason to weaken, then fundamentally it's a buy. But now technically you take a look and you see a nice support level on the one-day candles, and on the technical side, then maybe it's a buy as well. And so now it's just about risk management. If you decide, okay, I want to take a shot on buying on gold here, then you just have to decide where would I want to get in and out, what trade size would make sense for me, etc. And so I'm going to propose with this setup that we do a special setup with what we call AvaProtect. If you're not familiar with AvaProtect, it's a protection against losses for defined periods of time. And you can protect by the hour, you can protect by the day, etc. There are various time periods available. Obviously, the longer the time period, the more the protection might cost you. But you can look at the potential profits as well as the cost of the protection. I tend to like to use AvaProtect when I know that there's an expectation of large volatility. Because on the downside, if gold in this case was to go $100 further the wrong direction, I only lose during the protected time period what the cost of the protection was. But the potential profit with that type of volatility is much, much larger, okay, compared to a day where there's less volatility. So with the rate decision coming, the FOMC statement, fears about the tariff deadline, and a lot of announcements that came in creating mixed feelings about the markets, it might be a good time to use a strategy with AvaProtect to cap your risk and leave your potential profit wide open, okay? So if I'm looking at a trade with gold here, then I can, on my technical analysis, say, okay, only about 7 or 8 days ago, gold was up here at this resistance level and even higher towards the all-time high. So it's being reasonable to say that if there is momentum, gold potentially could come back up to 3,400. Okay, I'm sliding down even below this resistance level here and not being greedy with the take profit and saying if it even gets to 3,400, which is this area here, maybe I'd be happy to take profit there. So take profit, 3,400, which is well below the all-time high and even below the resistance level that we drew here from about 8 days ago. Now, stop loss, we don't need a stop loss for now until the protection on the trade would be near expiry. You can add a stop loss later. Now, I may adjust the trade size to 1 lot, and I can take a look and say for 1 day's protection, which gets me through the rate decision tonight and to the listed time here, 5 p.m. my time, tomorrow before the protection expires. But maybe I want to look at, well, what's the cost for 2 days protection? And it doesn't go up that much, from 1463 to 1847. And what that does is that gets me through the non-farm payroll announcement, the non-farm payroll announcement, which is this Friday, okay? Tomorrow being Thursday, and then the Friday announcement, the non-farm payroll, which it's pretty much one of the highest traded announcements each month for Forex traders. And it's something that also can create a lot of volatility and a lot of movement. So by putting 2 days protection, we're getting through the FOMC rate decision, we're getting through the tariff deadline, and we're getting through the non-farm payroll announcement with one cost of protection. And my potential profit here is over $10,000, and the cost of the protection is less than $2,000. So on a setup like this, if I'm right once out of 4 tries, I'm doing well. I could still be profiting. And if I'm better than that, if I'm right 30% of the time, 40% of the time, then I'm really profiting, okay, in a big way. But once I have this set up where I would want my take profit, which I put here, and where I would want the length of protection, now I just need to adjust the trade size to be the appropriate risk or cost that I'm comfortable with. And maybe I'm comfortable risking 1% per trade as an example. Okay, you could risk more than that, less than that. But if I'm looking at 1%, that's around 577 with the balance I have now. So then I would need a smaller trade size with this setup. So if I do 1/3 of a lot, I'm risking just over 600, which is just a hair over 1% of my balance. So I'll move this down to 0.3, and now I'm just under 1% risk. So 0.31, and that zeroed in on it pretty well. So 572 costs for 2 days protection. My potential profit over 3,000, okay, 3,200 potential profit, and the cost of this protection less than $600. Okay, so we're talking much larger potential profit than risk. Trying to make 5-6% profit on my account and risking a little less than 1% to try and do that. And so with this protection, once I take the trade, okay, this could go the wrong direction for the first day, let's say, $100 an ounce the wrong way. I don't have to get out of it if I don't want, but if I do, all of that negative floating would be added back to my account from the protection, and I'm only down this amount, the cost of the protection. I could even then re-enter from the better price, only having given up this small amount, and then potentially have a huge profit on the second trade if it comes back up from a much better price. And I could add protection on that one as well. Okay, very small risks, large movements with potentially with announcements like we have today, tomorrow and Friday. Okay, so once you have the risk management done, and I see, okay, it's only costing me $572, my potential profit's $3,300, I'm in the buy direction here on gold, then I can go ahead and buy. Okay, so now I'm set up that I don't have to worry about having my stop loss below the support level, and maybe when the rate decision comes in, gold spikes down, would have hit my stop loss, then went up, right? And it's probably happened to all of you at one time or another, where maybe you had your stop loss a little too close because of the volatility, it gets hit, and it ends up that you were right. It ended up going the right direction, but you got knocked out of the trade first. And so that's something that's a huge benefit with something like AvaProtect, is you can be patient with the movement. You don't have to slide your stop loss further away, which hopefully you aren't doing on a regular basis. But there's always that temptation if the movement starts going the wrong way. In this case, if gold was dropping and we had our stop loss here, you might start trying to slide your stop loss a little further away under the next support level, and then you end up risking and losing potentially more than you wanted to. Well, with the AvaProtect, there's no need to do that. We don't have a stop loss set yet. We have protection for 2 days all the way until after those announcements on Friday, and this could spike down $20, $30, $40 an ounce. I don't have to close the trade if I don't want to. I'm protected. There's no stop loss needed yet, and that could come flying back up by the time the announcements come through on Friday. And it allows me to be more patient with only a less than 1% risk on this trade. Okay, so a very useful risk management tool. You can check out your trade at any time. Go to the open trades. It's trying to bounce into the money from the beginning, but we're very early on in this move. If you're a scalper, maybe you close and take your quick $26 or whatever it's at right now. But the point is, we've got protection for 2 days. We wouldn't want to do that when you add AvaProtect, because we just paid $572 for the protection. We need to make $572 to break even, right? But we have 2 days for this movement to do that with 31 ounces of gold. It doesn't take long with that size position to get up even a couple $1,000. Okay, so you can be patient. 2 days protection in this example, and see where will all of this volatility take gold with the rate decision, with the tariff decisions coming, etc. Okay. Let me pause for a moment. Any questions, comments on the idea with AvaProtect or the technical setup that we did? Okay, and I don't see any questions popping up, but if I do, I'll address them as I see them. Now, we also could take a look at something like the Euro USD, which would make sense. I mean, there were some strong numbers that came out of the European Union today, but at the same time, there were strong numbers out of the US. And so that housing data being the weak link in the US right now. And, even without a surprise rate cut this evening, if there is a surprise rate cut in the US, forget about it. The euro probably will go flying up against the USD in rapid fashion. Okay, it's typically what would happen if interest rates are cut on a rate decision when they're not expected to be. Whatever currency's rate was cut would likely weaken pretty rapidly if that happened. There's no guarantee, but that's the general effect. Now, if it comes in as expected, the rate is not cut, okay, then it's about what do they say in the press conference? What does Jerome Powell have to say about the potential for rate cuts moving forward? And if he comes out and starts talking about there has been some data showing, inflation coming down and that maybe there'll be rate cuts soon, if he had that kind of talk, that could weaken the USD. Because then they'd say, oh, well, he's open to rate cuts soon. And that type of talk could cause the euro to be able to bounce on this chart here. If he comes out and talks the opposite and says there's too much indecision with the tariff situation and there's no way we can cut rates yet or anytime soon, if he talked that way, then you'd likely see the USD strengthen and pull the euro down further. So this is the indecision you have when you have big announcements coming and you're not sure exactly what will be said, or in this case, what the rate decision will be. And so you can only go by the technicals and what you think might happen with the fundamentals, okay? And this is set up similar to what we saw with gold, in that there's been a lot of dropping, okay? We've got 1, 2, 3, 4, 5, 6 out of the last 5 out of the last 6 days. There's been rapid, strong dropping of the euro against the USD. Okay, we were up above 118 back here, and now we're sitting at 114.72 or so. Now, certainly there's going to be a lot of movement up and down as the rate decision comes in and the FOMC statement is there and Jerome Powell talks. So we'll see if this support level gets broke or not. Let me draw the line. Okay, on the 1-day candles, we see a nice support level right here. It was back here, resistance. You see the wick touch this line and right back down. Then we see resistance again here and down, resistance here and down, again, resistance and back down. Tested it, but went right back below this price. Resistance on a couple more 1-day candles, and then once it went above this price, support, support, support. Classic setup where old resistance becomes new support. And if you don't understand why that happens, basically whatever fundamental news caused the euro to break through this price level, that fundamental news then still exists. And so what caused it to break above that price then causes it to stay above that price. So old resistance, the news changes the trend, becomes new support, new support. Now, what can make this support level break? New information. If it's big enough, if the news that comes out reverses the momentum that caused this to go above, then it breaks. And if it breaks, you could see a plunge because it takes big news to break through this price level. Look what happens here once it breaks through, how much it went up over the next couple days. So if it breaks through this price level down, you could see a plunge. If it doesn't, if it just tests it a little bit and reverses, depending on what's that FOMC rate decision going to be and what's their statement going to be, what will Jerome Powell say, you could see a rapid reversal with the USD giving ground back to the euro. Okay, it's a guessing game in terms of the fundamentals over the next 24 and 48 hours. But what we do know is that is a solid technical support level. There's no question that's a nice setup if you were looking to buy off this support level from a technical setup, because you can put your stop loss just below there and your take profit could be a much larger potential profit to the resistance level above. But also we could use AvaProtect. Why AvaProtect? The same reason we did on gold. These huge announcements both this evening, tomorrow, and Friday, and the tariff, if you want to call it tariff war or tariff negotiations going on between the US and many countries still, there's reason for a lot of volatility that could spike below this, hit your stop loss, then go back up. And to avoid that, you can use AvaProtect during times of high volatility. So maybe you think predictably this could go up a large amount, just as easily as it could go down a large amount. and you're picking the direction that the support level is in your favor. Okay, and so technically it's set up for a buy. Fundamentally, maybe you're 50-50, and so you go with the technical support level and buy with this setup as an example. So if I'm buying, then I'm going to say Ava Protect because of the high volatility over the next 48 hours or so. I'm going to protect this for 2 days. Let's see, one lot. How much is that protection? $3.94. Okay, so I could go 1.7 lots, 1.5. And so now I see the cost is getting closer to my 1% target. And again, you can do greater than 1%, less than 1%. I'm just using that as an example. So with 1.45 as a lot size on Euro USD, I'm risking about 1% of my account for the cost of the protection, okay? Rather than risking it on negative movement, I'm paying the risk up front as a cost for the protection. So I'm about 1% in once I take the trade because I make that payment for the protection, but then I'm risk-free for the next couple days with huge fundamental news coming that could cause hundreds of pips movement in one direction or the other. And so in this case, I would be hoping the direction would be up and that the support level holds, okay? And obviously you pick the direction that you think in your own mind is more likely. I think it's more likely they'll talk about if they don't cut the rate tonight, they'll at least talk about the fact that maybe rate cuts are due soon. And that could weaken the USD and cause the euro to climb back up, okay? It's kind of in my mind what I think could happen with the fundamental side. But this is a technical setup with a technical buy off the support level at the same time, okay? We'll see what happens with the fundamental news. Nobody knows for sure. So I set this up, 1% risk approximately on my account. Where do I want my take profit? Since I have a couple days, I certainly wouldn't put it so close. So I'll say up here before these resistance levels at the top, okay? And maybe I get rid of some of these lines. Got a little carried away in the last session maybe. Okay, and so resistance is up here, and my take profit would be just below that resistance. Okay, so around 170 or 117.75, let's say, for a take profit. 117.75. Okay, that's over $4,400 potential profit. A lot more than 571, right? So, it's what about 9 times, almost 9 times the potential profit compared to the cost of the protection. So again, if you can be right anywhere near 30-40% of the time on a move like this, and again, you can be patient for a couple days to see if it takes off in your direction, then you're going to be making nice profits with this type of setup. So I've got everything in order then. I have the amount of risk or cost in this case that I want, and I'm ready to go. Okay, so if I want to check out these trades, I can come over for either of these and look at the setup. This is the Euro USD. I can take a look at the chart and see, and maybe we go on the one-day candles. I can see on the chart my take profit, my stop loss, and my open price. So here's my open price. My stop loss I didn't put. There's no stop loss. This is the support line that I drew. And here's my take profit line up here. Okay, and I can adjust the take profit by just clicking and dragging it if I want. I can left click and drag, and now my take profit's in a new location. I don't have to type it in manually. I can just drag it on the chart to the location I want. Okay, so very easy to adjust your stop loss and take profit settings. In this case, I don't have the stop loss yet, but I could add it at any time. Okay, can edit the trade in this location. Just click the pencil, and I could come in at any time and add a stop loss if I wanted to. Okay, when would I do that? When my protection time is almost over, right? I still have 45 hours and 25 minutes of protection from AvaProtect. So I don't need a stop loss yet. I don't want to put a stop loss, have it hit my stop loss when I have protection, then it goes up the right way, and I think, well, why did I put a stop loss? I was protected, risk-free, and I got out of the trade with a stop loss, and then it went the right way. So there's, in this case, there's an advantage not to put the stop loss yet. In most instances, until maybe the protection is near its end, you take a look, and maybe then you add a stop loss before that protection ends, if the trade is still running. Okay, I think this is a good spot to stop with today's session. There's a lot of news coming in, and it's not that far away now, so I want to leave you all enough time to get set up with your technicals and with your charts. I gave you a couple examples of instruments that will likely move pretty big with the rate decision and with the FOMC statement, etc., that's happening this evening, and also through Friday with the tariff situation and the non-farm payroll announcement and the data that comes out on Friday out of the US. Okay. Thank you all for joining, and if you want to view this session or any others that you might miss at any time, just go to our YouTube channel. They're all recorded and uploaded by the next business day. All right, everybody, thanks for joining. All the best. Bye for now.